Gold has always been a safe haven, and right now, one Singapore-listed miner is proving just how powerful gold can be. Imagine a company with explosive revenue growth, sky-high returns on assets, almost zero debt, and one of the strongest balance sheets on the SGX Catalyst board. This isn't just another small cap. This is CNMC Goldmine, and its story might just surprise you. Welcome back to Durian Finance, where we break down the best investment stories across Singapore and beyond. Today, we're diving into CNMC Goldmine Holdings, a gold producer in Kelantan, Malaysia, that has delivered 8x profit growth, 44% return on equity, and consistent revenue expansion year after year. With nearly debt-free operations, strong free cash flow, and dividends that keep climbing, CNMC has quietly transformed itself from a niche gold miner into a high-growth cash machine. If you've overlooked this stock before, you might want to pay attention now. CNMC Goldmine Holdings Limited is engaged in gold mining and mineral exploration, with its flagship Sokor Gold Field project in Kelantan, Malaysia, in operation since 2010. It is also expanding into silver, lead, and zinc through its flotation plant. The group operates via Malaysian subsidiaries that cover exploration, mining, and management. CMNM Mining Group, operator of Sokor Gold Field. CNMC Pulai Mining, Pulai Concession Rights. Kel Gold Mining, Kelantan Concession Rights. Summerjail Land and Mining, additional exploration rights. CNMC Mineral Exploration, Prospecting. CNMC Development M and CNMC Mining, Project Support. CNMC Management Services, Administrative Support. Operations are concentrated in Malaysia, with Sokor as the largest mine producing door bars and concentrates. CNMC also maintains a Singapore office for corporate and investor relations. Revenue comes almost entirely from gold and mineral sales in Malaysia. The group typically relies on a small number of key customers, often with one buyer contributing the bulk of sales, providing stable income but concentration risk. Here we see CNMC Goldmine's two key processing facilities. On the left is the carbon and leach plant, or CIL plant. This is the company's main gold extraction facility. The CIL process combines leaching and absorption in a single step, making a highly efficient way to extract gold directly from ores. This plant is the backbone of CNMC's gold production. On the right is the flotation plant. Unlike the CIL plant, the flotation facility is designed to recover other valuable minerals, such as lead, zinc, and silver. It uses the froth flotation process to separate minerals from the ore, adding important diversification to CNMC's revenue streams. Together, these two plants highlight CNMC's ability to produce not just gold, but also multiple byproducts, improving efficiency and broadening its earnings base. In the first half of 2025, CNMC Goldmine's revenue reached about $52.8 million. The majority of this came from gold sales, which contributed $37.8 million, or over 71% of total revenue. Gold clearly remains a core driver of the business. The next largest contributor was gold recovered in lead concentrate, adding another $6.8 million, about 13% of revenue. Silver and lead concentrate brought in $3.5 million, accounting for around 7%, while zinc concentrate added $2.5 million, or nearly 5%. Finally, lead and lead concentrate contributed about $2.3 million, roughly 4% of total revenue. So, while CNMC is diversified into lead, zinc, and silver, the chart shows that gold alone still makes up more than two-thirds of revenue, underscoring its importance to the company's performance. In the first half of 2025, CNMC Goldmine saw a sharp increase in gold revenue from its carbon and leach plant. Sales volume reached 11,811 ounces, up from 9,357 ounces in 1H 2024, a growth of about 26%. At the same time, revenue more than doubled to $37.8 million, compared with $21.2 million a year earlier. That's a 78% increase in gold revenue year on year. A big driver of this growth was not just higher production, but also a much stronger realized gold price. The company sold gold at an average price of $3,197 per ounce in 1H 2025, compared with $2,266 per ounce in 1H 2024. This combination of higher volume and higher selling prices delivered a powerful boost to CNMC's top line, highlighting the leverage it has to rising gold prices. This chart shows CNMC Goldmine's cost structure per gold ounce sold, comparing the first half of 2025 against the same period in 2024. Starting with mining-related costs, expenses dropped slightly to $645 per ounce in 2025, down from $678 a year earlier. Royalty and tribute expenses, however, climbed sharply to $425 per ounce, a 38% increase. That pushed adjusted operating costs up to $1,070 per ounce, compared with $986 previously. General and administrative costs also rose from $156 to $178 per ounce, showing a 14% increase. Capital expenditure surged to $89 per ounce from just for last year, reflecting investment into operations. Altogether, this lifted the company's all-in sustaining cost to $1,337 per ounce, up nearly 17% year-on-year. When including exploration and other non-sustaining capital items, total all-in costs reached $1,406 per ounce, compared to $1,325 in 2024, a modest 6% increase. In summary, CNMC's cost base rose in 2025 mainly due to higher royalties and capital expenditure, but operating efficiencies in mining helped offset some of the pressure. As of the end of 2024, Sokor has about 236,000 ounces of proven gold reserves. Think of this as gold that's confirmed and ready to be mined. That's a big jump, about 50% more than last year. But reserves are just a start. Sokor also has a much larger pool of resources, about 946,000 ounces of gold in total. You can think of reserves as money in your wallet, while resources are money still sitting in the bank, waiting to be withdrawn when conditions are right. In the first half of 2025, CNMC produced nearly 12,000 ounces of gold, and for the full year, they're on track to make around 24,000 ounces. At that pace, the current reserves could last about 10 years, which means a mine could run until 2034 or 2035. And here's something important. CNMC's mining license also ends in December 2034, lining up almost perfectly with the reserve life. Now, if the company can successfully upgrade more of its resources into proven reserves, Sokor could keep producing well beyond 2035, potentially into the 2060s. So, to sum it up, around 236,000 ounces of proven gold reserves, 946,000 ounces of total gold resources. At current production, about 10 years of mine life left, and the possibility to extend for decades if more resources are converted. Sokor isn't just a short-term mine. It has the potential to be a long-term gold producer for many years to come. For the trailing 12 months ending mid-2025, revenue jumped to 112 million Singapore dollars, up from 65 million in 2024 and 52 million in 2023. That is a 72% year-on-year increase, driven by higher gold output and contributions from its flotation plant. Net income surged to nearly $27 million, almost 3 times last year's profit of $9.8 million, and more than 6 times the $4.1 million reported in 2023. This lifted earnings per share to 7 cents, a big jump from just 2 cents a year before. Profitability also improved significantly. Operating margin expanded to over 40%, compared with just 29% in 2024 and 12% in 2023. Likewise, net profit margin rose to almost 24%, showing that the business is not only scaling, but becoming much more efficient. On the cash flow side, CNMC delivered free cash flow of $37 million, up from $29 million last year. Operating cash flow rose strongly too, providing ample liquidity for reinvestment and dividends. And importantly, the balance sheet remains rock solid. With debt to equity at just 2% and a net cash position, CNMC carries almost no leverage risk. Finally, shareholders have benefited directly. Dividends per share climbed from 0.9 cents in 2023 to 1.4 cents in 2024, with steady payouts expected to continue. In short, CNMC is delivering strong growth, expanding margins, rising cash flows, and rewarding shareholders, all while keeping its debt extremely low. Let's break down CNMC Goldmine's valuation and return metrics over the past 5 years. We'll start with market capitalization, the value of the company's equity on the stock market. CNMC's market cap grew from about 175 million Singapore dollars in 2021 to more than 314 million by mid-2025. Now, let's add an enterprise value, or EV. Unlike market cap, which only reflects equity, EV takes into account both debt and cash, giving a truer picture of what would cost to buy the whole company. For CNMC, EV rose from around 160 million in 2021 to about 278 million in 2025. The gap between EV and market cap is small because CNMC carries almost no debt and consistently holds a net cash position. In other words, the company is financially very strong. On valuation multiples, we see price-to-book climbing from just 1.3 times in 2021 to more than 3.3 times today. Investors are willing to pay more for each dollar of net assets. Meanwhile, the price-to-earnings ratio has compressed from around 22 times in 2022 down to just about 10 times in 2024 and 2025. That means earnings are growing faster than the share price. Profitability has been the real story. Return on assets jumped from only 2% in 2021 to nearly 29% in 2025, while return on equity rocketed from 2% to 44%. That shows CNMC is deploying its capital much more efficiently. Efficiency multiples tell the same tale. EV over EBITDA has fallen from about 9 times in 2021 to under 4 times by 2025, and EV over sales sits at about 2.5 times. Investors are now paying less for each dollar of revenue and operating earnings, a sign the company has become far more profitable. On the balance sheet side, CNMC remains almost debt-free, with debt to equity around 2% and a net cash position every year. And shareholders have been rewarded with higher dividends, from 0.8 cents in 2021, climbing to 1.4 cents in 2024, and already 1.5 cents declared in the first half of 2025. Altogether, these numbers tell a powerful story. CNMC has grown bigger, more profitable, and more efficient, while keeping a rock-solid balance sheet and rewarding investors with rising dividends. That's a rare combination in the gold mining sector. At the very top is Newmont, the global leader, producing nearly 6.5 million ounces in 2024, with reserves of over 134 million ounces. Their all-in sustaining cost was about $1,620 per ounce, and their market cap sits above $50 billion. Barrick Gold comes next with close to 4 million ounces of production. Their costs are slightly lower than Newmont's, around $1,484 per ounce, and they've recently expanded their reserves significantly. Barrick is valued at more than $40 billion. Agnico Eagle produced about 3.5 million ounces, with an impressive reserve base of 54 million ounces. They stand out for having the lowest costs among the majors in this table, at just $1,239 per ounce. Polyus, Russia's biggest producer, mined around 3 million ounces in 2024 and boasts the lowest cost of all, just $767 per ounce, although their global presence is more restricted. AngloGold Ashanti, producing about 2.7 million ounces, reported an all-in sustaining cost of around $1,672 per ounce, putting them closer to the higher end of the cost curve. And then we have CNMC Goldmine, operating on a completely different scale. In 2024, it produced less than 20,000 ounces. That's 2 orders of magnitude smaller than the majors. Its all-in costs, at about $1,282 per ounce, are competitive with the industry average. But what's striking is the reserves. Just 236,000 ounces attributable, compared with tens of millions of ounces held by the giants. The contrast is clear. CNMC is a niche, small-cap gold miner, while the Big Five are multi-billion-dollar global players producing millions of ounces each year. But despite its size, CNMC's cost base and profitability ratios show it can still compete on efficiency, even if it doesn't have the scale. Why could gold keep rising? First, the big banks have turned decisively bullish. Goldman sees gold at $3,700 by year-end and $4,000 by mid-2026, while J.P. Morgan expected to top $4,000 by next year's second quarter. Second, the macro setup, Fed rate cuts, tariff-driven inflation risks, and large fiscal deficits, pushes real yields down and investors towards safe havens. Third, geopolitical stress from the Russia-Ukraine war. France's political turmoil and U.S.-China tech tensions keeps demand for insurance high. Finally, central banks are still net buyers, and ETF inflows have picked up again. Put together, policy, geopolitics, and flows all stack the odds in favor of higher gold prices into 2026. Here's the latest analyst view on CNMC Goldmine. Coverage is still limited, but 2025 brought a flurry of updates. SAC Capital is the most bullish. After CNMC's record first-half results, they raised their target to $1.13, up from 45 cents earlier this year. PhillipCapital sits in the middle with a 70 cents target, based on a DCF and around 9 times FI 2025 earnings after the strong half-year beat. Lim Tan Securities is more conservative with a 48 cents target set back in March, before gold prices and earnings really accelerated. Aggregators tell the same story of thin coverage. Investing.com and Yahoo Finance both show an average around 70 cents, but that's essentially based on one analyst. The takeaway? Street targets range from 48 cents to $1.13, reflecting how quickly CNMC's fundamentals and gold prices have been moving in 2025. Let's walk through how CNMC stock has performed in 2025 and what that means for investors. This year, the share price has soared from around 29 cents in January to about 77 cents now, a staggering 165% gain. That's a tremendous return, but it also raises red flags. When prices run up quickly, they bring expectations, and those elevated levels mean future disappointment could trigger a sharp drop. Here's how the landscape shapes up. On the plus side, CNMC delivered stellar earnings and revenue growth in 1H 2025, with margins and free cash flow improving significantly. The company remains debt-free and is generating healthy dividends around 3%, with potential for even longer mine life if more resources are converted into reserves. On the downside, the fast-moving share price introduces valuation risk, and the company's exposure to global gold prices and regulatory uncertainties puts it in a delicate spot. Plus, as a small-cap mining company, any hiccups, like missed forecasts or delays in permitting, can cause outsized price swings. In short, while CNMC continues to deliver, its dramatic share price rally has added complexity. It remains attractive for growth and yield investors, but only if you are comfortable with the risks that come with that kind of volatility. To wrap up, CNMC Goldmine has proven in 2025 that even a small-cap miner can deliver outsized growth. Revenues and profits have surged. Free cash flow is strong, and the company remains debt-light. Its stock has already climbed more than 160% this year, reflecting both fundamentals and the strong backdrop for gold. Looking ahead, the global picture still favors gold, with the Fed shifting toward rate cuts, rising geopolitical tensions, and major banks like Goldman Sachs and J.P. Morgan forecasting prices as high as $4,000 an ounce in the next 18 months. For investors, CNMC offers both opportunity and risk. Strong momentum on one hand, but volatility and reserve limitations on the other. If you found this analysis helpful, don't forget to like the video, share your thoughts in the comments, and subscribe for more deep dives into gold, Singapore-listed stocks, and global market trends.